Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to be talking about Elliot waves in this video. The Elliot wave theory was developed by R.N. Elliot, and it's based on ebb and flow. It's a five-wave sequence that's followed by a three-wave corrective sequence, and so the combination of the five and three waves makes a total of an eight-wave pattern. And so this is a really good pattern to learn. Very good, similar to the Fibonacci retrace being a pattern that you see quite frequently on charts in the stock market. The same thing with Elliott waves. You'll see this quite frequently. So it's a good one to learn so you can identify it later. It will help you with determining entry and exit points and when to time tops and bottoms for either taking profits at the top or looking to play a bounce. Okay, so please go to stockcharts.com, look at, go to the chart school, look at, type in Elliott waves and go to Elliott wave basics. If you look down here, the basic sequence is a five-wave sequence where there's there are three impulse waves or motive waves if we're an uptrending stock, and so 1, 3, and 5 are up waves, and 2 and 4 are what are called corrective waves. So it's 1, 2, 3, 4, 5, and then after the fifth wave, it's the top of the run, and that is followed by basic three-wave correction where A and C are the impulse waves on the way down, and then B is the corrective wave. So it's 1, 2, 3 down. I've said three waves before, so I looked at it like 1, 2, 3, for the completion, but it's actually a five-wave sequence because there's two corrections within the five waves in the Elliott wave. There's two corrections making five for and the inverse of that, if the stock is going down, there can be a five-way sequence on the way down as well, and the downward moves are the impulse or motive moves, and then the correction moves are the the up waves 2 and 4. So yeah, so it would be the inverse of this. It'd be 1, 2, 3, 4, 5, and then after the fifth down wave, after the fifth wave's complete, then that many times signals the reversal. Okay, and so if you look here at the basic 8-wave cycle, you'll see here it's 1, 2, 3, 4, 5, and that's signaling the top, and then it's A, B, C for the correction. And if you can see here, this is like a head and shoulders, shoulder, shoulder, head, like a neckline. So it many times it'll form a head and shoulders type pattern, and then once it breaks below, that could signal the next sequence. And what you want to do after the correction wave is look for the possible new Elliott wave pattern to form. This is the inverse of that. This will help you for downtrending stocks. If you're shorting the stock or if you're looking to play the bounce, it's 1, 2, 3, 4, 5. After the fifth wave, that's signaling the bottom. Then it's A, B, C on the correction. Okay, so let's take a look at GALE here. GALE had a five-wave cycle complete here. It's 1, 2, 3, 4, 5, and then A, B on Friday, and so C will likely be down. That's what I'm predicting here if I charted this correctly. So be looking for a down wave to start the day for GALE. As you can see here, these triangles formed in between, and so yeah, and so I charted this on the 15-minute time frame, and then if you look here at SGY, it's 1, 2, 3, 4, and then I made kind of a stretch here for the fifth one, but 5 all the way up to the top here, and then A heading down. And so there could be, I'm thinking, a bounce for a B wave up to retest this level on the high close here on Friday, and then a C corrective wave to pull back down. I'm not sure if I charted this correctly here on wave 5, but this is another example. You can see the triangles in between. This might have been a stretch, but this is a pattern you're going to see quite frequently. So please review this information and add the Elliott waves as another tool to the belt. Okay, thank you for viewing this video.